great. Well, hi, I'm Arthur Mrozowski. I'm a local, meaning the Silicon Valley guy for the last 35 years. I have an early stage fund called Silicon Hill Venture, mostly focusing on media, IoT, and a little bit in fintech. But the fintech part of it is kind of growing with the second generation of Mrozowskis that are pretty successful at it. So in any event, I would like to introduce the panelists today, and I'm not sure who's present, who's not, but first I have Xiaohan from the Decentralized Finance Lab, which is Silicon Valley person. And then we have, I can see on the screen, we have a Mauro Andriotto from SMC, and he will be talking to us from Switzerland. And also on the panel, we have a Chris McCann from RaceCapital. I don't know if he's here. I'm not quite seeing him. And then Brooke Pollack from Hutt Capital. And so the way that I think that we should start is essentially each one of the panelists could tell a little bit about themselves, the companies that they represent, for like 1 or 2 minutes, and then we'll start talking about such wonderful and broad subject as the DeFi. So let me start from like alphabetically from the list that we have here on the schedule, which will be Xiaohan, Zhu. I will let you start talking about you and what it is that you're doing with the Decentralized Finance Lab.
Sure. Thank you, Arthur, for the intro. So personally, I have a mixed engineering and finance background. The first 15 years of my career are all in engineering. So back in 2008, like during the last financial crisis, I went to Wharton to get my MBA there. After that, I started moving into investment. So spent a couple of years in private equity. And then back in 2016, I raised a small VC fund called ZMT Capital. At that time, like one of our investment focus was fintech and blockchain. So that's how I got into the space. And then in 2017, many of our portfolio started to issuing tokens. Like there's like a project called Brave and also Ion. Like many of them become like $1 billion worth of tokens nowadays. That's how we started had the exposure in crypto from that time. And we started investing personal and also the fund carve out into crypto. So far, like invested more than like 100 projects already. And also starting from 2018, after we deployed the first fund, we decided to not to bother raising another fund and just focus on like, because I'm a builder at heart, so I started working on a project called Meter.io at the same time. So from this perspective, I'm both an operator and an investor. Like on the operating side, that's where the Decentralized Finance Lab, what I'm spending most of my time on nowadays. We developed for 3 years. We launched the project token on an exchange IEO last summer, and then into all the up and downs. Like now it's probably the highest point is sitting at 20x return from the public launch. Now it's hover around like 10x. Yeah, so been through all these like bear market and bull market, multiple cycles in crypto, and also been through like all the DeFi hypes from beginning to now. So I'd love to share with everyone here today.
Well, thank you very much. And I hope that I pronounce your name properly.
Yeah, Xiaohan.
Xiaohan, okay, thank you. And I'm not sure if the Christopher Umscheid is here, so I'm just gonna go and jump to Brooke Pollack as the next person.
Yeah, thanks, Arthur. Yes, my name is Brooke Pollack. I'm the founder and managing partner of Hutt Capital. We're a blockchain venture fund-to-funds platform. So our goal as an investment firm is to provide diversified exposure to the top blockchain and crypto startups globally through a single investment and a single relationship. Practically speaking, we do a couple things. So our fund invests the majority of its capital as a fund to funds into closed-end blockchain VC funds. So we don't do anything on the hedge fund or trading space. These are all long-term focused closed-end venture funds. We built a portfolio of about 15 of the leading blockchain VC funds, across sectors. So, some funds are purely focused on DeFi, others are more focused on centralized infrastructure. Some are deep in the NFT space, some do all the above and lots of other things, but you're really trying to provide that holistic exposure across subsectors, across structures, across geographies. And we also do some direct investing and also through co-investment, effectively trying to pick off the best companies that emerge from these portfolios. We have a pretty unique purview into the ecosystem through all these GP relationships, through our fund of funds program and the deep relationships we have across the GP landscape. And utilize that to our advantage given the proprietary intel and data that we have. We got started in late 2018. We're currently working out of our first fund. Before this, I spent a decade in the institutional private markets world, working across private funds, secondary and direct strategies for leading global investment firms. A lot of folks here to be familiar with. Went fully down the rabbit hole in 2017 and never made my way back out. I started Hutt Capital shortly after, and here we are. So yeah, thanks for hosting today.
Okay, congratulations. Sounds really interesting. So next one up is the person that is very patient. I guess he's in Europe, so it's pretty late out there. Thanks, Mauro, for sticking up with us and then being as part of this panel. Please.
Problem it's my pleasure, and I'm a professor in finance in Italy and in Switzerland. I teach at Bocconi University, University of Pisa, and the UBIS Geneva. That is a private university in Geneva. I am an advisor of the European Commission. I am a jury member of the European Innovation Council. I help the European Commission to select projects and companies that are disruptive and that have interesting project for the future growth of the European economy. I work inside the Horizon Europe program, that is a 95 billion program created by the European Commission for all the different stage of innovation in Europe. So from university, research lab, till small, medium enterprises to big corporations. I am an equity partner of SMC, that is a big family office in Switzerland. We are in 15 countries with a physical location. In particular, we are in Russia, Middle East, in Switzerland, in every city. We are in Europe and in South America with the big office in Panama. I am also an equity partner of another company that is an asset management firm that is Ethica Capital. We have funds in Luxembourg, and we are focusing on alternative investments, in particular gold, real estate, classic cars, and blockchain. Indeed, my core business is about blockchain and cryptocurrencies. I am also, let's say, a kind of a startupper, because we have created a platform that has just been authorized in Switzerland. It's a security token platform where we have a primary and secondary market, but probably I will speak about this a little bit later.
Great. Well, thank you very much, Mauro. So the next person is Chris McCann from the RaceCapital.
Sure. Hey, everybody. My name is Chris McCann. I'm a general partner of RaceCapital. We're an early stage venture fund based here in Silicon Valley. We invest all across early stage, so pre-seed up to Series A, with a major focus on all things infrastructure, including enterprise infrastructure, open source, and financial infrastructure, where a lot of the crypto and sort of DeFi bets sit for us. Before this, I used to work at Greylock Partners, I was there for over 5 years, and back in the 2013-14 timeframe, we made a handful of investments in the Bitcoin space. So namely, we did Coinbase, Zappa, and Blockstream all during that time frame. And then post Greylock, pre-race, I was one of the earliest users and investors for Binance when they first launched in 2017. In 2018, I was the very first investor for Solana. And then in 2019, the fund, we did FTX before the exchange was released. And FTX is one of the fastest growing exchanges in the world. So excited to be here, happy to share more about DeFi and all the stuff we're seeing.
Okay, great. Well, thanks for a wonderful introduction. Talking about the DeFi, what is the landscape like? What in general the DeFi is good for versus the decentralized finances? I understand that everything is pretty much open on open source. With potentially a lot of bugs that are probably haunting everybody, but on the other hand, you don't have that political aspect of somebody else's controlling your the destiny from the point of view of any kind of a political or otherwise influences. So the question to you, to the panelists, and I don't know who wants to pick it up, is what sort of instruments are you currently using out of this whole DeFi? And why is it that you're using it as opposed to just leave the legacy system?
Yeah, I can take that on. Maybe I'll give an overview, and I could talk about like a few sort of specific examples. So decentralized finance, it's really in the name itself. So the main purpose of all these things is they tend to be much more open, transparent by nature. Most of the projects tend to be mostly open source. And then it's decentralized. So there's no centralized component. So in a decentralized exchange, you're not exchanging against the exchange or market makers. You're doing it directly against the counterparties themselves. Something like a Uniswap or like a Radium on Solana, like you're exchanging it directly with the participants itself. So it's a very different architecture and makeup. But in terms of the actual categories, if you will, most of them are basically taking a lot of the concepts that we use in the traditional finance world, and they're just building them in the decentralized component. So most of them are all around exchanges, lending, futures, insurance, payments, options, automated market makers. And then now you're also starting to see a few more of the emergent things around like NFTs and staking and sort of a lot more of the crypto native concepts as well. In terms of usage, I tend to be an active user of most of these things. I love sort of trying out all the new things in the spaces. And I have to give a shout out to one of our portfolio companies, Solana. Like there's a big kind of emergent sort of DeFi infrastructure layer being built on this protocol and ecosystem as well. And so I've got sort of the pleasure of being able to try a lot of the new things being built on top of it, which tend to just be more faster by nature, much more sort of user-friendly and just kind of a better experience. Because the one major kind of downside to a lot of DeFi stuff is sometimes it can actually get quite expensive to do transactions. Especially, I don't know if anybody was trying to do like an Ethereum transaction yesterday. Man, some of the fees could actually get quite high. So a lot of these kinks and stuff kind of still need to be worked out on.
So pretty much everything is based on Ethereum as a platform, and then all of the exchanges and everything goes through their system with the zero cost potentially, with probably cost to the planet Earth, because it turns out that each one of those transactions is still comparably from like if you were to compare the Bitcoin, it's pretty cheap, but it still costs in a kilowatts of power that needs to be generated somewhere. But that on the side. My question to would be the following question to the panel would be like who is of you is actually using some of the DeFi like specific what are the specific companies that you're funding or you actually had funded? I don't know if the Xiaohan wants to tell us more about how is he using or implementing it, or anybody else on the panel.
Sure. Yeah, I can talk a little bit about this and also my perspective on DeFi. So I think I can also like answer a little bit about the previous question. So actually DeFi, I think fundamentally is more about like freedom, because in the traditional finance space, I mean, you always have a big brother like SEC or like regulators. They try to protect investors, trying to prevent the bad things from happening. But there's always like a group of the society that just doesn't like people from like looking over their shoulders. So I think that's one of the fundamental driving force for the DeFi and also crypto in general. But also it's also like a more like a gamified finance. So you may notice like a lot of things in crypto is about like speculation. It's about like getting rich quicker. That has been a consistent narrative, and also the way you attract like people into the space. Like fundamentally, I would say what's currently building in DeFi or crypto is more like a liquidity-driven finance game, essentially. If you look at the landscape of DeFi, there's like a couple supporting pillars. So the most important one is actually what we call it the decentralized exchanges, DEXs. So these are like the Uniswaps, the Ethereums, those parts of the world. And there's another pillar is the lending and borrowing. So that's like compound protocol and Avi, that type of things. So these two are actually the most fundamental like value generation of the entire system. And a lot of things are building on top of it. For example, the third thing that incentivizes users to come in is called liquidity mining. Basically, if you provide the liquidity. Oh, actually, one thing is to give people a little bit background is like in DeFi, for example, both DEXs, the trading and the lending borrowing, in traditional finance, you need to have a market maker to set the price or have a way to facilitate the price discovery. But it's very difficult to do this in a decentralized environment. So what people have invented, it was something called like bounding curve. So there's a like mathematic curve. Don't ask why there's a curve and why the curve is like that. It's just an arbitrary curve that sort of people are feeling it fits. But because of the existence of the curve, that people will just like arbitraging and along these curves and basically providing some rules for like the supply and demand. And eventually market will settle to an equilibrium, which is the price discovery. Essentially, it helps with the price discovery. So the way to create these bounding curves is to put like different crypto tokens into smart contracts. So these are called liquidity. So, and as you can imagine, the more tokens or coins people put into these smart contracts, the smoother or the better experience these bounding curves will be. And this become like more like the value people to like decide whether how much value a project will be worth in the DeFi space. And a lot of things in DeFi is driven by this. Yeah, that's I mean, like how typically the DeFi projects are valued nowadays. Yeah, so that's
which is another question that I wanted to actually address to Brooke, since he's the one that actually has an open wallet and then he's investing in the companies. My question to you is what is the current valuation? Like how do you evaluate the companies in that space? Is there like a measuring stick for figuring out what those value propositions, what those startups are worth, and how do you value them?
Yeah, so Hutt Capital, we're a fund of funds platform. So we're investing in funds that are focused on early stage investing. We're investing in growth stage companies. So we're not ourselves evaluating like really early stage DeFi protocols. We leave that to the underlying fund managers who are experts in the space that we work with. That said, these protocols, it's very much like doing early stage traditional investing, right? A lot of these might have, early prototypes and products, but be relatively early stage. It's not like you have, tens of millions of revenue where you can do traditional valuations. So, the market kind of sets valuations based on quality of team, quality of product, how far along they are, just kind of general market conditions, very similar to how very early stage traditional companies are valued. So, at that very early stage, it's difficult to say. As these companies grow, however, even for protocols, you look at these DeFi protocols, these are actually, cash flow generating protocols, and you can do traditional, cash flow multiples on these protocols, just like you would with traditional companies. You look at some of these larger, decentralized exchanges like Uniswap, for example, generates hundreds of millions. It might even be $1 billion at this point plus annualized revenue through its protocol. And you can do very traditional valuation metrics to decide what you think that should be worth. So there's actually a lot of ways to value these protocols in traditional ways. I think a lot of folks aren't as familiar with.
Yeah, I have a few questions from the audience, but I'll go back to it in a moment. I'm just curious, Mauro. You have built the first exchange in Europe that was a legal exchange in Europe. You want to share a little bit of how do you did that and how is it operating and how is it doing right now?
Well, it took us 2 years speaking with the market authority here in Switzerland. We have just received the green light 2 weeks ago. Actually, the problem was about the secondary market and not really the primary market, because primary market in Switzerland is quite easy to set up. There is no license if you want to launch a crowdfunding campaign. It's more about the secondary market when you are going to exchange between two parties, even if it's a peer-to-peer. We are a kind of a decentralized platform. It means that everything is happening on the blockchain through a smart contract. We are not a protocol. We are using Ethereum, but everything is decentralized on the blockchain. Even if probably we are going to change, because I wanted to offer an exchange that is free for investors, and clearly, if the fees on Ethereum are growing, it won't be free anymore, because they will have to pay maybe $50 for doing an exchange of tokens. And our target is about small, medium enterprises and startups. It's not about big corporations. So we are expecting an exchange of tokens with an average low total value. But as I said, it took us 2 years speaking. At the moment, Switzerland is very, very open to cryptos and to blockchains. As you probably know, some years ago, Switzerland has made a change. It means that the bank secret is not anymore one of the things that can be kept in Switzerland, and so technology is a political choice. And probably I can say that at the moment Switzerland is the incubator of Europe. Also looking at the European Innovation Council, where I work with, Switzerland is one of the most successful country, even if it's one of the smallest, is one of the most successful countries in presenting new companies and proposals. So yeah, the platform is divided in 2 areas. The first one is the primary market, and is very much similar to a crowdfunding platform. It means that you have a new project, and the new project is offering its securities, can be bonds or can be shares. And then you have a secondary market. At the moment, it's still not open, even if we got the green light, because we are waiting that the project that actually was our proof of concept, let's say our business case, is completing the first phase. At the moment, they have raised the 500K. That is not bad, and so we are waiting that they will complete the first phase, and then they will open the secondary market. On the secondary market, in order to provide liquidity, we have created a fund in Luxembourg. The name is Etica Chain. This fund has also an ISIN code and will help the secondary market to provide and to have liquidity for functioning.
Very well. Sounds good. So the actual platform is not really functional yet. I mean, it's not live from the perspective of one person wanted to do anything. It's you got the clearance right now for launching. So when is that going to be live?
I mean, we will be happy to receive new projects to launch on the platform. Also, if they are in a secondary phase, it means if they need a secondary market, we will be happy to list them. Otherwise, I think before the end of 2021, we will have Overfuture, that is the project that is concluding the primary market phase, will start the secondary market.
Okay, well, thanks, Mauro. I have a question for Chris. Actually, it's coming from audience, and I think that you'll be probably the most qualified to answer it. The question is what mechanism is in place to attract and have the participation of the institutional investors? How is that, how can we open it up to be valuable to them?
Yeah, I guess for anybody listening, if anybody has actually, I would highly suggest anybody who is interested in the space to actually go and try to use one of these things, not just I guess think about them or like talk about them, but actually use one of these products. From usage, like I would imagine one of the biggest impediments to institutional adoption is is basically the lack of custody solutions, and not custodians being available or usage, but being able to use DeFi products while not having to self-custody your own stuff. Because right now, largely, if you're on Ethereum, to use any of these things, you mostly need to have MetaMask or some other equivalent type wallet. You're going to need to have Ethereum. You're going to need to know how transactions work, and you're going to have to be comfortable with all this. But if you're like a traditional fund or an institution or a large hedge fund or a company that has a digital assets on balance sheet, you're probably not as an individual going to do all this stuff. Like you're going to need this to be intermediated through a qualified custodian. Another shout out to one of our portfolio companies. We have a portfolio company named Polysign, who recently just raised their Series B financing from one of the largest, oldest investment banks called Cowen. They're actually going to be offering a full custody solution around digital asset type products. But what you really need is you actually need that second step in where you need the custodians to be able to connect with all these DeFi protocols and underlying projects to have you be able to use all this stuff without having to worry about transferring in and out or needing MetaMask or all that. Like it needs to be a much more seamless experience. So at least from like an institutional side, I think still like workable, usable custody is still one of the biggest impediments that needs to be solved.
No, I think that the question was more pertaining into institutional companies investing into those companies. How does that, how one can make the companies in that space being attractive to the institutionals? But I don't know what the what the criteria is for any one of them in a sense of believing in this or other particular technologies. As we know, the Bitcoin and other ones.
I still think it would be largely the same, because again, a lot of these things are mostly architected from the viewpoint of an individual person who owns digital assets. They're not really architected from the perspective of an institution that wants to participate. I mean, presumably you could do it as like a market maker on some of these platforms, or maybe like a liquidity provider, like an LP on the other side. But even that would be like a pretty cumbersome experience for like an institution themselves. So yeah, I think there either needs to be like a remake of a lot of these things more from an institutional perspective, or more likely you're just going to see more connections and more hooks into these from places that or institutions that they already sort of know and trust and use. So I actually think the two things kind of fall similar in line. I don't treat them as like different kind of expressions.
Mm-hmm. Well, I got it. I'm gonna switch now to over to Brooke. Brooke, in terms of because you've dealt with those companies and so on, and in terms of the challenges from the point of view, both from the adoption of the technology and then also vulnerability from the point of view of having an open source, what are what are your biggest like challenges in the sense of evaluating those companies that you're investing in? What are your thoughts?
Just alluded to, when everything is open source code, anyone who is technically sufficient can go in and read the code and try to figure out how the protocol works. And there's so much innovation in this space in terms of new financial products that there are really unique ways that you can exploit these protocols with, people call them hacks. They're not really hacks. They're just ways of exploiting the way the smart contracts and the platforms are architected to effectively take user funds just based on how the protocol works. And anyone can go in and see exactly how everything works and try to exploit it. So it's both a blessing and a curse, right? So if you have not done your homework in terms of properly understanding the code, just properly thinking through all the different ways it could be used with all these different products, people are going to take advantage of that. You saw that very recently with some, I guess, platforms on top of Binance's smart chain, which are effectively, they were kind of copycats of existing platforms ported over to that smart contract platform. And I think what was it called, bunny swaps, whatever it was just exploited for like $4. Not surprisingly, the value of the token related to that platform just declined by a very, very significant amount. And you've seen things that happen or aren't really doing their homework in terms of what they're interacting. And on the positive side, it is an incredibly quick way to test out how strong your protocol is, and can it be exploited, because you put it all out in the open. People figure out, okay, people are going to look for different ways to exploit it, and if they can, they're going to. So kind of the survival of the fittest is very extreme, and at least a very, very quick iteration, such that if there are exploits, people figure it out quickly and you can move on. Unlike what you see with centralized companies, for example, where those things effectively persist in perpetuity and then they get covered up because they're within a centralized platform and they never tell anybody. And then 5 years later, so.
You're breaking up. Oops. Yeah. Brooke, I think we need to switch over to audio only. I think that your video and everything disappears for a second.
Oh, apologies. I'll try one more time here. But anyways, the technical risk is a blessing and a curse. Just it's a survival of the fittest in terms of figuring out if these protocols are strong enough. Whereas with centralized companies, those can kind of go on forever and aren't in the public sphere like they are with these open protocols. There's certainly regulatory risk. A lot of this stuff doesn't have KYC, AML. You're interacting through some sort of Ethereum or smart contract wallet. So that's kind of a forward-looking risk. That's not necessarily project specific, but that's something folks are thinking about as well.
Mm-hmm. Good. So I'll go back to Xiaohan. Just a question for you. Has any one of your companies actually has issued the one of those DAI coins, or have you actually done any of utilizing the platform to create your own coin, just out of curiosity?
You mean what do you mean by DAI coins?
Well, one of these maker DAO coins, like the ones that you can build up on Ethereum if you actually created it, any one of your companies.
Yeah. So like I think nowadays people realize the equity raising and crypto raising are very different. Like in the equity space, like you like try to raise some like initial funding from like YCs or like basically those incubators, and then like you try to get an MVP, and then like you get like some institutional money from Series A, Series B, starting to build up. But in the crypto space, it's like you raise some initial seed funding, and then once you issue the token, you immediately like become a public company, and like you are facing the retail investors directly, and the valuation tend to like grow dramatically when it converts from like a private. It's like most of the strategy, like the VCs and the crypto funds are doing basically PAP strategy, right? Private market in and public market out type of thing. So that's traditionally gives the highest like short-term returns, but obviously over the long term, it's about like how much the community the project builds on. I mean, like attracts, and how many users, how much value is locked into the system, how many fees it can generate, that type of thing. More and more merging towards the traditional like public company type of model. It's just the entire growth period become like highly compressed, and you will see like especially in the, for example, in the last round of the bull market back in 2017, 2018, you see projects raising like tens, hundreds of millions in terms of the total raise, and then go to the public market. But this round, what you notice is like most projects are doing much smaller raise. Like many of them are doing like a couple of million type range. This is already like sort of like bigger raise projects, and then they immediately go to the like public market for the token launch, and then because of the power of the retail community, like the valuation of the entire project, I mean, goes way faster, and the founders tend to have a bigger amount of the percentage under their control, which is both good and bad. It's good for the founders, but also sometimes introduce like control issues. I mean, like if I would say like disciplinary issues, like if the founding team was not really wholehearted to build a community, to build like a real product. I mean, if they're just chasing for short-term returns, this can be very dangerous for the long run of the product. I mean, the project. So depends on which phase you get in as an investor. You may have a very different way of evaluating and looking at things, I would say. And also the space is also rapidly evolving. Just now we mentioned like a lot of things nowadays are building on Ethereum, right? But I would say this is not necessarily the case moving forward. Because if you look at how the crypto and blockchain evolves, it actually resembles the evolution of internet like very closely. So in the beginning of the internet, like not even internet, the network, it's a local area network. Basically, it's like Ethereum itself is more like an Ethernet. It's just a single chain, and it's a single chain network. It doesn't even talk to other people. And then I think back to the 90s, there's like proprietary network protocols, high performance ones, like the ATM network. At that time, people are thinking they are going to take over the world. But if you look at how the internet evolves, at the end of the day, it's a router and IP that connects everyone. Like everyone can still have a heterogeneous network. Like you can have your own community the way you are working originally. And then like there are connections that allows these networks to communicate with each other for like smart contracts or like the programs to build on top of all the chains or all the infrastructures. So I believe it's quickly evolving towards that direction. Yeah, based on like our interacting with the space and also applications developing in the space. So, and like that's what we're working on nowadays as well, to provide both scalability and supporting applications to be easily deployed and communicating across multiple blockchains. Existing ones, not inventing like a new one type of thing. So that's what I'm spending most of my time nowadays working on.
Thank you, Xiaohan. Yeah, I think that we're just about running out of time. We have about 4 minutes left, and I was going to switch over to back to Chris and kind of summarize for 1 minute everybody their thoughts on the future of the DeFi from their point of view, and then all of the rest of the questions I'm pretty sure that we're going to be able to answer through the blog that is generated there, and I know that Marty is keeping track of all of the emails, so I'm pretty sure that anybody in the audience that wants to reach out to you guys, they could probably be more specific and ask more specific questions. So Chris, what do you think?
Sure, yeah, maybe I'll leave everybody with 3 thoughts at the end. One, DeFi is an incredibly new, exciting space. There's a lot of stuff going on, and it's hard to even capture all of it in this really short time. So, you know, if anybody listening is interested in this, I highly recommend actually trying things, finding out for yourself, playing around with some of them, because again, it's a very new, incredibly sort of interesting space. And my final comment is, because all these protocols by nature are open source, what's also interesting is to see the developer ecosystem on top of all these things, building these services, building applications, building them into other applications. And so it's not just what we can see today, but it's this whole sort of ecosystem around it. So go try, play things out for yourself. And it's an incredibly exciting time. So thanks everybody for listening to all of us.
Great, sounds good. So next is Brooke.
Yes, I could not agree more with Chris. Go out, if you haven't already, try out these products. I think it's difficult to understand if you haven't gone through that process. But from my perspective, you know, fintech historically has been like putting lipstick on a pig. It's a fancy UI and better data being applied to our existing system. Doesn't mean you can't build very valuable businesses, but this is a fundamentally new financial system built for the software age that has fundamentally better products than what can be created in our traditional world. You know, you can earn savings, you know, you can earn, you know, real interest on just holding cash. You can take out loans in 5 minutes with no KYC AML. And that's just very, very basic examples, but the types of products which are going to exist in this market are going to blow the existing financial services world away. And it's all transparent. Like all of this is on chain. You can see everything that is going on. All of the issues around lack of transparency in our financial system are significantly enhanced by this open financial architecture. And I very strongly believe this is where our future financial system is headed.
Thank you. Next, Mauro, any thoughts? Closing.
Mauro, you're on mute.
Yeah, sorry. Yeah, I think that for the next future, one of the issues that will have to be solved is about the legal framework of DeFi. That at the moment is a really gray area. And I think that at a certain point it's something that somebody will have to face, because at the moment, I'm seeing some projects like Decentralized Autonomous Organization that they really look like a fund, for example, in fintech. Okay, and clearly a fund has some rules in the traditional world that are not going to be respected in DeFi. So I really think that the legal framework is one of the things that somebody will have to face, and this, I mean, I do not know what and how it will change the DeFi world. On the other thing, the other observation.
Yeah, I think I have to cut you because I think that we're up against the next panel, and then I also want to have the Xiaohan also say a few words at the end, because I think that Marty has to, that there's another panel that is
Yeah,
actually waiting
absolutely.
up. So do you want to say something closing?
Yeah, sure. I think just a few advices for like family offices want to get exposure to crypto and DeFi is like if you don't know much about crypto and like don't have time to study it, maybe just focus on the top coins, maybe like Bitcoin and Ethereum, or like work with a more professional like fund who's specialized in the space. But if you want to like getting like bigger alphas, I think it's about like identifying projects that can create the biggest network effect in the crypto space, because this is all about like traffic, how many users, how many capital you can attract in DeFi.
Yeah. Thank you very much. A great panel. It's a deep subject, and I think we kind of like touched a little bit of the surface of it, but hopefully raise enough interest of the audience to dig in deeper. And I'll let Marty take on another panel.
Great job, guys.